What's going on, guys? This is Tex. Today is Thursday, December 12, 2019. So in this video, we're going to look at some live footage of an options trade that I executed today on Apple. I had a request from one of my faithful subscribers who also uses the Lightspeed trading platform. He was curious about trading options on it, so he wanted to see how I execute an options trade. Regardless of what broker you're using, I think this video is going to give you some insight into how the options premiums will move based on the underlying. As you guys know, I plan my trades, be it options trades or equity trades, of course. I always plan my trades off of the equity chart. But if we will recall from my options video, the value of your options contracts are actually impacted by three different factors. One of those, of course, being the underlying from the equity chart that we're planning our trade off of. The second, time, because they are a decaying asset. In this particular trade, we're looking to be in and out very quickly, so that should not be a problem. And the third is probably the most important, especially in this particular trade, implied volatility. So volatility is a huge driving factor when it comes to the value of an options contract. Apple actually opened with a gap down today. So when we look here, this is the chart for the 270 puts on Apple. It opened with a gap up, hit a high of around $3.50 a contract. But when the market ripped on that Trump tweet, look how much these option contracts, look how much these puts just absolutely melted in value. They're all the way back down here at $1.50 a contract. So it's amazing how these option contracts will move with volatility. And when we're talking about trading, when we're talking about day trading options, we're trying to really utilize that volatility in our favor to try to maximize our returns and minimize our risk. Now, the way that I execute this trade is not the way I execute every options trade, but for the most part, I always try to take advantage of that volatility to try to get the best price possible when it comes to either buying or selling contracts. Okay, so some of the other things that we're looking at here, this is the time and sales for Apple's regular equity level 2. And then right here, this is the options level 2. Unfortunately, Lightspeed Trading only lets you have one options level 2 open. So you'll notice during the video a couple of times it switches over to the Tesla options level 2 because I was watching Tesla and Apple. But for the most part throughout the video, we'll see Apple's options level 2 open right here. You can see that I have the 270 put selected and I have the current week's expiration, which they're set, today is the 12th. They're set to expire tomorrow at the end of the day on Friday. And similar to an equity level 2, you got your bid over here and you got your ask here, time and sales there. Across the bottom, I have my custom buttons, and I use these pretty much all the time for executing my orders. The top buttons are for buying, so I can buy 1, 2, or 5 contracts. What that will do is send an order to the market at whatever the current ask price is when I click the button. That way I get in the trade, but I'm at least having some control over the price that I'm getting in. I'm sending a limit order versus a market order. And then when it comes to selling, I have buttons to sell 1 or sell 2 contracts at the in between the bid and the ask. I find that I usually get fast and relatively good fills by selling between the bid and the ask. And then the same thing for selling 25%, 50%, or 100% of my position. And then the last button, this is like for stops. This would sell my entire position at the current market price. All right, so as I unpause the video, the setup here was pretty straightforward. Like I said, very knee-jerk reaction here, huge extended run up, but with Apple coming right up into 271, if we'll recall, that was its prior all-time high, a very key level from the daily chart. And as an added bonus, we have 2 other levels above that. You have the previous close and you have the pre-market open. So essentially what I'm looking at here is 3 levels of overhead resistance with this parabolic extended move up. Look how far away its 9 EMA is here on the 1-minute chart. So the odds favor that it will reject off of this area here if it can get up there. So I'm watching it very closely and I'm very interested to see if it gets up here and starts to have trouble. I want to go ahead and buy the 270 puts and look at basically just scalping a high probability pullback. I'm looking at minimizing my exposure to the market. That way I avoid any any further knee-jerk reactions if another Trump tweet comes out or whatever the case may be. At this point in time, I'm looking at just making some money very quickly and minimizing that exposure to the market because it is very, very volatile right now, but I can take advantage of that volatility to my benefit. All right, so as we push up into the level I'm interested in, I'm sitting tight, I'm watching here. I want to see that it's genuinely going to have trouble here. I like what I'm seeing. All right, and so what I want you to pay attention to is we'll be watching the ask and the bid price, right? See where they are right now. I want you to see how those will spike up in value very quickly as soon as Apple even remotely starts to pull off this level. Okay, so it pops over a little bit. That's not uncommon. I'm liking it, and I'm about to hit the button here to buy 5 contracts. And then I'm going to click it again, trying to get 10 contracts. Right there, I just clicked it to buy 5, and I didn't get filled. And I didn't know that at the time, but I clicked it again to buy another 5. So at this point, I think I'm holding 10 contracts. Then I look over and see I only have 5. And Apple's already made this initial move down right here. So unfortunately, I didn't get the second half of my order. So I went ahead and canceled that and just went with 5 contracts. A little unfortunate. 10 would have been ideal. 5's kind of like an oddball amount to scale out of on a trade like this, but it is what it is, so we'll just have to run with the 5 contracts. Now, I apologize. We switched over to Tesla level 2 because, again, I was looking at that, but I think in just a moment we go back to the Apple level 2 and we should stay on it for the rest of the trade. But what I want you to pay attention to is you see we got this initial move down, and you saw that how the ask and the bid, they immediately popped up in value. You'll see here in a second when we switch back to Apple. You can see my average price there at 141, and there's 5 contracts I'm holding. So let's get back over to the Apple level 2 here. Okay, here we go. All right, now we're back to Apple. See, it's up at 155 on the ask. Just that small move down, it's up 15 cents from where I got in. So right there, I just sold 2 contracts. As soon as I got that first move in my favor, just to go ahead and take a little bit of profit off the table and remove some of the risk, because the options contracts, if it ends up holding and rips higher, those option contracts will melt quick, right? So I don't want to be holding my full position size. When I get that initial move, I immediately pay myself something, and then as you get those moves in your favor, right? You see this push down right here. You see how the ask and the bid, they spiked up. So I'm trying to sell into those pushes. So by selling into those pushes in my favor, when the ask and the bid really spikes up like that, there you go right there. I just sold another contract because we're coming right into possible support level. You got the pivot level sitting there. But by selling into those volatile pushes, right, I'm trying to get the best price possible because I don't know exactly what the options premium is going to reach. Right, when the underlying here, when Apple hits this level here, I don't know exactly what the options premium is going to be, right? So I try to sell into those pushes into my favor to try to get the best price possible. So I sold another contract as we were trying to hold the pivot here just to, again, not stick around too long, just to make sure that I lock in a nice green trade here. The first 2 contracts I sold, I made about 8%, and the second 2 contracts, I made about 17%. So just that small move from where I got in to this first support level into the pivot point right there, that's a 17% return on those options contracts. So ideally, if I'd had 10 contracts, it would have been a lot easier to scale out a little bit and have a much bigger position down into my primary target area, because you're looking at 271 down to here. You're looking at about a little over a 1 point move on the underlying, which ended up being a little over a 25% move in the 270 puts here, down to the bottom of this pullback, which is basically still coming here. You can see how the ask spiked up on that push down. It was at 172. Now it's 178. Now watch this last wash here. It's going to pop up to like another 10 cents. Boom, right there. Just jumped up another 10 cents, just like that, right? So every time you see that wash in your favor and the ask and the bid really jumps up like that, that's when you're selling. You're selling into those pushes. And then right there, I just put my order out to sell the last of my position. Probably could have held it just a little bit longer. Again, we were kind of targeting right here, that very key level, the prior high of day there. And then you've also got, you can see the 9 EMA starting to catch up to the price action. But we're right into the target area that I was looking for. So nice, quick in and out trade in what, like 3 minutes. So would have been nice with the 10 contracts. I could have left a couple running here and certainly would have gone back green just on that one trade. I was able to finish the day green, but just unfortunately didn't get my full size position. So right there, look at the push down. See the premiums jumped up 194 on the ask, 186 right there on the bid. And I think that's the bottom. I think it does retrace there because you look at that. That's a nice size pullback. You've got this very key support level here, the 9 EMA. So it makes sense that Apple should retrace right here. Maybe it comes up and puts in a lower high and then comes down, at which point you could certainly get back in the trade. Or if you didn't take it here, you could get in the trade there. But the really important thing here is that you want to make sure that you've sold the bulk of your position when your target, as it's coming into your target. You don't want to wait until it hits your target and then starts to bounce. Because if you wait for the bounce to start selling, then the options, they're going to lose value very quickly. So if you're holding and Apple retraces, even if it only retraces, into a lower high and you bought it here, you're probably going to go red on the position on this retrace right here. The value of those options contracts will melt very quickly on that retrace. Okay, so the key here is to sell into those pushes into your favor. And to make sure that, you get the best price possible, the best return possible, remove some of the risk. And that way you're not holding too much of your position whenever a retrace does come. Now, if you want to leave a piece on, you certainly can. But my trade idea played out exactly how, I wanted it to. And so just like that, that's how I would get in and out of the market, limit my time exposure in this very whipsaw kind of reaction market to a Trump tweet. So with that, guys, I'm going to wrap it up there. Hopefully you found the video helpful. I really appreciate it. If you have any questions, post those below and I will certainly get to those. Thanks a lot, guys. Take care, and I will catch you in the next video. See ya.